And we've been talking about the global issues, but you have a very particular issue with Kenya Airways and fundraising. How has the rights issue gone? Was it what you expected?
Given the global market conditions and specifically the very tough market conditions in Kenya, especially with regards to equities, we are very pleased that we were able to achieve our minimum subscription level of 70%. But obviously, we were looking to raise $250 million. We have raised $175 million, so we are happy with it. But of course, we are not over the moon because we didn't achieve 100% subscription, which we were hoping to.
Take us back to why you've done the rights issue, and I see from your information on it, it's 1.4 billion new shares on offer at 14 shillings per share, 16 new shares for every 5 ordinary shares. So that's the structure of it, but what was the motivation behind this, and what was the calculation of the number that was the target?
2 years ago, we sat back as a business and we decided to do a 10-year plan, which we have been talking to the market about. We call it Project Mawingu. Mawingu is a Swahili word which means clouds. And this 10-year plan was approved by the board about 2 years ago. We then did a funding plan, which was also approved by the board. And that funding plan requires quite a lot of funding over the next 10 years. We broke it down to the first 5 and then the next 5. And as part of the first 5 years, we are looking for $3.6 billion to roughly double our fleet over the next 5 years. We're currently at 35. We are looking to have 70 aeroplanes in the next 5 years. And as part of that $3.6 billion funding requirement, we decided that it would be a good opportunity to give the shareholders an opportunity to come in fast via rights issue. And the intention was to raise the $250. The rest of it, we've already been talking to banks to do delivery financing. So really, to answer your question more directly, the purpose of this money is to be part of the funding of the next 5 years because of the expansion plans we have in terms of the fleet development.
Your shareholders, such as they are up to now, how well have they done out of the airline? Because it's a sector which is notoriously volatile in terms of customers, but you have to plan long term, things that are out of your control like fuel costs. So what sort of returns have your investors had?
Historically, we have done an ROE of between 15 and 20%. And then we look at our 10-year plan. Of course, we cannot include any futuristic information in the information memorandum. But from our own internal records, we expect to maintain an ROE of between 15 to 20%. But mentioning shareholders, I just want to highlight the fact that the Kenya government actually took 100% of the entitlement, and we are very pleased about that in the rights issue. And KLM, who are the biggest shareholder before the rights issue, took about 75% of the entitlement, so we are very pleased about that.
You have to look at your business model too. If you look at what's happened to airlines worldwide, some of those big traditional European airlines have gone out of business, they don't exist. Others have amalgamated. There are the Middle East airlines. Some of these airlines are highly subsidized, others are expected to make their money and survive, and they do. It's a difficult industry to be in. How does your business model accommodate all this, and particularly being where you are in terms of world trade in Africa?
If you look at the world GDP growth over the last 10 years, the leading growth has been in Africa, and specifically in Asia, and more specifically in China and India. If you see where Kenya is positioned from a geographical perspective, you couldn't find a better place to connect Africa to Asia, and specifically India and China. So our plan is premised on the expected future traffic growth in Africa because of the GDP growth, and also between Africa and Asia. There's a huge amount of low-hanging fruit connecting Africa with Africa, which is the most underserviced continent, and as you probably know, is the biggest continent. And then connecting Africa with Asia, specifically China and India. There's a huge, huge growth of traffic demand, and our plan is premised specifically on that growth. And our strategy is very, very clear. We want to be the airline that links Africa to Asia, We are still seeing the numbers. So whereas there is a big issue in Europe because it's a more mature industry, and in the U.S., we are finding that we are really at a very high trajectory in terms of the growth phase, and this is what we intend to take advantage of.
We've had controversy in South Africa about South African Airways asking for a 6 billion rand support from government. Some people call it a bailout. They say they need to recapitalise. If you get into trouble, does your government bail you out, or do you go out of business? What is the ideology, if you like, around Kenya Airways and government support? They are a shareholder, but would they put more money in if you needed it?
Absolutely not. We are a commercially run airline, probably the only successful one in Africa, perhaps with Ethiopian. We do not have any government support. If we go under, we go under, and that's why we are very careful in terms of what we do with our future plans. And that's why, for example, we had to go back to the shareholders to do a rights issue to get money for our growth. So unfortunately, we don't have that luxury. And that's why if you look at our results over the last 15 years since we went public, we have actually never made a loss. And if you look at our 10-year plan going forward, that is exactly our expectation.
That was Alex Mbugua, Finance Director of Kenya Airways.